Hello, everyone. Good morning, good afternoon, depending on where you're at in the world. Thank you so much for joining us at Taylor Morrison in our home buying webinar. We do these every so often, typically once a quarter, just to speak with our consumers and our prospective buyers on what's going on in the world of home buying and give you a little bit of a Taylor Morrison flavor. So with that, we're 2 minutes past the hour. Let's go ahead and get going. A little bit about me. My name is Stephanie McCarty. I've been with the organization about 7 years. I run our marketing and communications function, so we have the pleasure of really staying at the top of the pulse on what's going on in the market and how we speak to you, our prospective buyers, and our consumers at large. So Tony, if you want to go ahead and advance the slide. A little bit about me. I love my job. I love my work. I think my most important title is mom, mommy, mama. I have a 6-year-old daughter, a 4-year-old son, and a 9-month-old little girl. So between my day job and my 24-hour job, I'm pretty busy. But let's talk about what you came here to hear about, which is not my 3 kiddos. But let's talk a little bit about Taylor Morrison. And before then, if you want to switch slides for me, Tony, I'll go through a little bit about what you can expect from our time together today. We have a lot to cover. We really want to help you understand what's going on in today's market. We have excellent speakers. You're going to hear from Carla, who is at the front line of our sales in Dallas, but can give you a really great snapshot of the market and what you can expect when you enter a community and you sign a contract and what it looks like when you enter the Taylor Morrison family. We will do a Q&A at the end. So you'll hear from Carla, you'll hear from Christy, who is our in-house expert when it comes to all things financial services. And then we will do a Q&A at the end. Now, please understand we get a lot of questions. I know that there's a good chance that your question is going to be very specific to your certain situation. And if it's very hyper local around a community or state specific question that you might have, we might not be able to answer it today, but we will give you an email address at the end to send those questions to so that we can help get it to the right person. I also invite you to visit the state or community specific website page on taylormorrison.com. There will be an opportunity for you to reach out to the internet home consultant, who is your online concierge service that can help you for some of those community specific questions as well. And please don't feel like you need to feverishly take notes. We are here to share. This knowledge is power, and the information is designed for you. So if you signed up for this webinar, you will get a follow-up email that has the presentation and the recording available for you. We want you to just sit back and relax and get as much out of this information as you can. So please don't, get carpal tunnel or anything trying to type and write everything down. So really quickly, Tony, let's tell our attendees who Taylor Morrison is. If you got the invite for this event, you probably already know who Taylor Morrison is, and that's why you're on our lists. That gave us the opportunity to reach out and communicate to you about this webinar. We are proud to be recognized as America's most trusted home builder for 7 consecutive years, which is an honor and a badge that we wear proudly. That is not a paid for award. This is a survey that is conducted by shoppers, not even buyers. And it's all around the sentiment and how they feel when they engage with our brand. So this is when they come into our communities and they talk to our sales associates. The impression that we give them is that this will be a mutually beneficial relationship for both parties, and that they can trust us when they are investing in their new home. And it's such a large purchase that Taylor Morrison will be a great partner in that process. We are the nation's 5th largest home builder. So we build coast to coast and all around, and we have product that we'll show some photos of our photography of our product. We have all different kinds of product, whether that's attached, detached, single family, we have townhomes, condos, you name it. So depending on what you're looking for, there's a really good chance that we have something that would fit that. Like I said, we have a lot of scale. We build in 20 of the major US markets, and we serve every demographic. So we don't go after just first-time home buyers or the luxury buyer. We certainly have enough product in communities that serve our first-time move up, second-time move up, And we can't forget about our active adult population, so our 55 plus and our brands, Esplanade, Bonterra, Ovation. We have quite the opportunity for that buyer as well. Some of the other badges that we wear with pride, we have been named and recognized as one of the world's most admired companies by Fortune, which is a pretty cool honor to bear. And we have also been honored 4 times by Bloomberg and our Gender Equality Index. So we take diversity, equity, and inclusion extremely seriously at Taylor Morrison, both in-house and with our customer base, to make sure that we are a good representation of who is shopping and buying Taylor Morrison. But what's not on this slide, which I think is a little bit more important, probably coming from the marketing gal, is why Taylor Morrison. So who we are, I think, is a little less relevant. I think some of the differentiation between Taylor Morrison and some of our peer groups is how we show up as a builder and as your builder partner. We're a little bit more of a progressive brand. I think our customer experience is one of the best in class in terms of how we show up for you and guide you through this journey, which is not a quick transaction. This is, you know, a build process that can take several months, and we want to be there for you every step. There's a lot of emotion involved in a purchase as large as a house. So we do think that progressiveness and that customer experience is something that sets us apart. Carla's going to walk you through how you can engage with our brand online. I think the tools that we give our buyers today, especially in this market, that allow you to do your research and get all the information about the home and the things you need in your home to fit your specific lifestyle. We go above and beyond in that regard. We know that people have different preferences when it comes to engaging with brands or how they want to shop for a new home, how many times they want to go into a community, if at all. So optionality and consumer preference is something that we spend a lot of time on. So how you want to go about your home purchase is up to you, and there are plenty of paths, but we really at Taylor Morrison put you in the driver's seat of that. So we hope that you take an opportunity to use that as an advantage as you're shopping. So let's briefly touch on new home benefits, which is our next slide, Tony. Hopefully none of this is new to you in terms of, I don't want to be master of the obvious, but there are plenty of benefits, just like when you purchase a new car versus a resale car. There are a lot of benefits in a new home versus a resale home. You're the first owner of the home. Depending on where the stage of that home is in its build process, you might have the opportunity to personalize the interior, which a lot of people want to have that blank canvas to start with. So you can select the interior that really suits your lifestyle. And what's a huge benefit of being a new home owner is that community kind of coming to life together, right? So you're building that sense of community with new neighbors. And that's a lot easier when you're all new versus when you're coming into maybe an established neighborhood. New homes today are built with different building codes, right? So what got approved maybe 10, 15, 20 years ago might not get approved today. So I think the quality of materials definitely changes. You don't have to worry about that with the new home. You have a home warranty. A lot of times you have to buy one when you're in resale, and that's okay, but you will have that warranty with Taylor Morrison after you close. We take a lot of pride in our floor plans and our design of our products, so you get that modern architecture and layout. We do a lot of consumer research on what do you want in your homes of today, so you'll see the way that those floor plans come together, whether it's open space, the use and flexibility of some of those rooms. We take a lot of pride in how we design that, so you'll see that in a lot of your new homes with Taylor Morrison, along with energy efficient features. At the start of the pandemic, we launched a suite of options that we include in every home at no additional cost under our TM LiveWell brand. And this is really taking into consideration how you live in the home and your safety within that home. So we talk about the low VOC paint, touchless faucets, your smart programmable thermostat, and a number of other benefits that come in your home under that LiveWell package at no additional cost. And then just typically stronger financial incentives that assist you with your closing costs. And I'm not going to take any time there because you have a true expert, Christy, who will talk to you about that. But that is also a huge benefit when it comes to the closing table if you're purchasing a new home. We're going to continue that conversation really briefly on the next slide, Tony. Right now, we know, depending on your situation, if you're currently in a home and you're wanting to sell that home and move into a bigger home or downsizing, whatever your reason for moving, we know that there are a lot of opportunities for you here. As we talked about the emotional investment, that is clearly something that we do not lose sight of at Taylor Morrison, and want to be a part of that life-changing opportunity with you. On the financial investment, we do know that the rent price increases as of late in 2021, and those that are not certainly going to stop anytime soon in 2022, rents are going up. We know that just home interest rates are also rising, but not quite at the speed as rents. So we do think that now is if you're in the market to buy a home, now is a particularly interesting and great time to do so. Certainly if you're looking to get out of a rent increase situation. But that is enough for me. I'll come back in a few slides and tell you about a few other things, but I would love to turn it over to you, Carla, and you can take our attendees through your section.
Thank you, Stephanie. Well, good morning, good afternoon, everyone. Tony, if we can go to the next slide. Thank you guys for the opportunity, and I hope I can provide some insight and helpful tips today that you can use as you begin your home buying journey with us. Just a little bit about me. I started out in the new home industry as a community sales manager, working in the model, selling beautiful homes to homeowners for about 10 years. And then after that, pursued leadership roles with public and private builders, found my home here at Taylor Morrison in 2017. And I've been in the industry for over 20 years. I too have 3 babies. I call them babies, 18-year-old, 15-year-old, and 10-year-old. So they are professional new home sales counselors as well, because they've been exposed to all the fun that the real estate industry provides throughout all the years. So on the next slide, Tony, let's talk a little bit about what is going on in today's market. The home building industry, like many other industries that I'm sure you've encountered, has certainly felt the impacts of material shortages and delays along with labor constraints. As home builders, we've had to work, 3-4 times harder the last 20 months or so, dealing with supply chain while remaining keenly focused on completing construction of all of our homes. Material delays have varied by market, but it's ranged anywhere from windows, paint, brick, lumber, HVAC components, and other items. Despite these challenges, housing supply remains very low, and 96% of our top markets across the nation continue to experience robust demand. So that lack of housing supply, the continued cost increases, and the historically low interest rates, they continue to fuel the demand across the country. So because of this, our industry, builders, have needed to implement limited lot releases or sales caps, highest and best offer situations in many communities to help prevent any further bottleneck of material availability and labor pressures. It's also so important to us here at Taylor Morrison that we deliver on expectations. So hopefully you'll find this information that I'm going to go review helpful as you begin your journey. So how do I get my home buying journey started? Well, first and foremost, make sure you are on an interest list for the community or area that meets your family's needs. That is the best way we can keep you informed of availability and current pricing. Coming soon communities are added 3 to 6 months prior to opening, depending on market. And actively selling communities, they're releasing homes monthly. So if you're on that interest list, you will receive the latest and most up-to-date communication. Once you've joined that interest list, our team has created some really cool dynamic tools that provide great information just at your fingertips. You can connect with your internet home consultant or community sales managers for a virtual appointment, and go through any of your questions or review details. We have a very convenient tool on the community page on our website where you can click to schedule a virtual, phone call, or in-person appointment for an available time that works with your schedule. This provides you the convenience of researching your options from the comfort of your own home. Next, be prepared with your earnest money deposit requirement. The amounts required at contract, they're going to vary by market and by community. So make sure that you're connecting with your community sales manager as to what that amount is, so you're prepared to act quickly once homes are available. And last but certainly not least, Taylor Morrison Home Funding can help you determine your financing situation so you can have that confidence in your purchasing power while knowing your options in case you need to pivot on community, plan, or even the loan amount. The key advice I have for you is to stay informed, especially in today's markets, and be patient. In my 20 years in new home sales, I can honestly say our market conditions are unprecedented. But luckily, you have a great team here at Taylor Morrison that can help you at every step. So if we go to the next slide, Tony. So let's talk about a little bit about the digital home buying journey. So at first, you're going to begin that home search. You have two options that you can navigate on your own on our Taylor Morrison website that really provide you so much information to help you gather all the resources that you need to make an informed decision. First, you've got the virtual tours where you can, in the community within the floor plan, you can see videos, photography, and even use interactive floor plans to determine how the home would lay out with certain structural options. On a completed home or nearly completed home, you have the ability to have a self-guided tour. So as you're driving through the community, and if you see a home that you're interested in taking a look at, you can scan a QR code. There's a sign in the front yard and receive a custom access code for your home tour. The great thing is that you can do this on your own before or after office hours at your convenience. But of course, our internet home consultant or community sales managers are available to answer any questions for you after the tour. Once you've attended a self-guided tour or you've been online and you've determined you found the right community, the right floor plan, and everything that meets your family's needs, you can actually move on to the next step with a home reservation. With this tool, you can choose a lot and from there select a plan, exterior design, and even add on the structural options that work for your family and lifestyle. Or you can simply select that favorite home design first and then see what available lots there are where it can be built. And you can also reserve an inventory home where the plan and options are already selected and under construction. I want to make sure and explain that the home reservation tool is one you would use when you're ready to move forward with your purchase. Once you've reserved in some of our markets with a $100 hold, you have 48 hours, 24 hours to schedule that appointment with the community sales manager and 48 hours to sign the purchase agreement, provide your earnest money deposits, and move forward to your home buying journey with Taylor Morrison. If you simply want the opportunity to view the home to see if it meets your needs, you will not use the home reservation tool. You can certainly schedule an in-person virtual appointment or a self-guided tour to ensure that this is the right home and community for you. So let's go on to the next slide, Tony, and let's talk about the benefits of buying a quick move-in home. So I mentioned earlier the material delays and labor constraints in our current environment, and Christy's going to talk a little later about why buy now with historically low interest rates. But why should you consider an inventory home? Well, there are several benefits. When we choose an inventory home, we take a database worth of information, which helps us determine the most popular home designs in a community, the most commonly selected structural options, and color palettes that are curated by our home design experts. It's a win all the way around. You combine that with a shorter wait time to move into your brand new home, reduce stress, or even the need to make endless decisions on an extended to-be-built timeline. And of course, always you receive the same warranty as a to-be-built home. On to the next slide, Tony. The new home trends. So we stay on top of the new home trends. And with that, we have fabulous packages available with our Canvas program. Today, colors are trending warmer and cozier because we're spending more time at home and we seek that warm and inviting feeling these tones provide. So as an example here, this is our #1 Canvas package, the Concerto. And you can see we've got the wide plank white oak flooring, which is very, very popular. The sand and gray tones with the countertops and cabinetry, dark rich tones as well that you can choose with cabinets, and even contemporary tile for those markets that are primarily tile flooring, where you can have an 18 by 36 or 24 by 48 tiles. So we've taken what's really in demand, popular, and available and curated these into different packages. On to the next slide, Tony. So following up on the new home trends, these are the colors of the year for 2022. And you can see here these colors with evergreen fog. It speaks to that wellness and nature. They're very complementary and harmonious to each other. It's very warm, cozy, not too contrasting, not too cold, but those are the trends that we're seeing now in homes, in the new home industry and design industry that we've taken into account as we develop our Canvas packages. And going on to the next slide, Tony. So our Canvas design packages, they're so on trend that we now use them in our model homes. And the reality is, who has not walked into a model home and been so wowed that you wanted your home to look just like the model? So that's achievable with Canvas, and it's also achievable within several budget levels as well. So here's a couple of photos of our models where we have used Canvas packages. And I think on the next slide, Tony, we've got a couple more photos as well. As you can see, very clean, very transitional, but still very inviting and on trend. All right, before I turn it over to Christy to the next slide, Tony. So Stephanie mentioned earlier that one of the recognitions we're most proud of is being the most trusted builder 7 years in a row. You have a team of experts to help you every step of the way. You have internet home consultants who can just on the phone or virtually ask you questions and get you connected with the community sales managers. In most states, the community sales managers are required to have real estate licenses. You have professional designers that can help you put a timeless color package together on your beautiful Taylor Morrison home. You have licensed and knowledgeable loan consultants. You have Aero consultants if you're looking to improve your credit score just to get that best rate you absolutely can. And of course, last but not least, you've got construction superintendents who are experienced in building code and engineering requirements. But I have to mention, to earn the most trusted builder 7 years in a row, that's not earned because of widgets and construction. It's earned because of the people in our organization. So you have this team who are service focused, they're passionate about what they do, and they're experts in their field. And this team is here to guide you at every step of your journey. So Christy, I'm going to hand it over to you.
Thank you, Carla. Such great information. While you guys were talking, there are so many great questions in the chat. And before I get started and talk about mortgage, I just want to let you guys know that hopefully we are answering some of the questions today in the presentation, but we will certainly go back and do our best to get to all of the questions in the Q&A today or follow up shortly after the call. And if we don't know the answer, as Stephanie mentioned, we will resource you to the right place. But thanks again. I'm so excited. This is one of several home buying webinars I've been privileged to host with my team, and I'm joined today also with Deandra Avalos, who will touch, she's our Aero manager for Able Ready Own. That's our qualification improvement department. So she's going to be hosting with me today, all things mortgage, but really just a quick bit about me. I've actually recently celebrated my 20-year anniversary with Taylor Morrison, and this is honestly where I've called home the majority of my career. And as crazy as it sounds, mortgage financing is actually a passion of mine, along with many of my counterparts, and it's really centered on being part of the home buying journey with our customers, not just about strictly obtaining financing. So we really truly believe at Taylor Morrison Home Funding that we sell homes also with Taylor Morrison. And we also understand that purchasing a brand new home is such an exciting time, and completely empathize that obtaining financing can be the scariest part along the way. But when we focus solely on our Taylor Morrison customers, we're able to speak with one voice, which really is the true benefit to using us as an in-house lender. We are an independent mortgage banker and provide a one-stop shop, which offers a variety of mortgage options, and we try to tailor those to suit your needs and work hand in hand with Taylor Morrison. So our goal, honestly, is to ensure that we are ready with financing when Taylor Morrison has completed construction of your home. And finding the right financing option, it honestly should be just as important as everything that Carla just touched on, which is finding your floor plan and choosing those design selections, having that quality construction, and really giving you guys the love and care during that home buying journey. So Tony, if you'd advance the slide. I'm going to try to very high level today talk about, one more time, Tony, sorry, that's me. Just talk about and touch on just some high level mortgage 101 basics. And to some of you, this may be old hat, maybe you're not a first time home buyer, but we want to take this time this afternoon to really focus on those that may be thinking of purchasing a new home and just want to make sure that they're pointed in the right direction. But again, agreeing that buying a new home is exciting, but the financing side of it can seem daunting and sometimes scary. So we don't want to overwhelm you, and we could spark some more questions along the way, but maybe we'll give some clarity that you're in a good position to start looking for a new home or ready to pull the trigger. And if you realize that maybe it's not time yet, we can give you the confidence that you're closer to your front door than you may have thought, and just give you some useful tips and some tools. And like I mentioned, we'll have Deandra talk about credit and qualification improvement. And I'll also touch on our mortgage technology platform, which we call Dorothy. So I'll introduce you to her. If you want to jot down questions during the call, that's great, or just throw them in the chat. And then at the end of this, we'll give you some links and tips to reach out to local loan consultants near you. So whether you're having that third cup of coffee or afternoon tea, depending on your time zone, we'll go ahead and get started. And Tony, you can advance. And I'll just touch on, honestly, what we call our 4 C's of mortgage qualification. And that's a pretty common buckets that we put our qualification in when we're looking at the overall approval of a loan. But I like to refer to it as the 4 legs of a chair, giving a good visual that hopefully we all can relate to. So the rhetorical question is, you know, would you knowingly sit in a chair with a broken leg? So it's important when we're looking at loan approval that we've got 4 solid legs of a chair. And I'm going to touch on all of these. Deandra's going to touch on the credit piece. But it's so important for any lender, not just Taylor Morrison Home Funding, but when we're lending hundreds of thousands of dollars, we have to understand not only your ability for down payment, your employment and income stability, as well as your history of your credit. We also have to make sure that the loan that we're securing against is to collateral that's valued appropriately for the price that you're paying. Tony, if you want to advance, I'll just touch on that appraised value piece on collateral real quick. And we do require appraisal reports, and that's standard in the industry. And that is going to give us and any lender the current real-time value of property. We have appraisals that are done by an unbiased third-party licensed appraiser. So there's no influence given by the lender or the builder at the time that's done. And we have to make sure, as I mentioned, that we're lending appropriately to that value, make sure that your home is worth the price you're paying, and protect you as the home buyer for not paying too much for the home. Appraisers do deep research of the comparable sales data. Like I mentioned, it's real time. It's looking at homes that have closed recently in the last 3 to 6 months. They verify the condition, size, features, and use real comps for that home size. And they compile the information into a report and give us that real-time selling price. Next slide, Tony. When we're talking about the second C, which is our cash, which is really the down payment, we have to determine that the cash that you're using for down payment and any of the closing costs actually meet, number one, our maximum loan to value threshold. And the loan to value is going to be that ratio that we use determining the amount necessary for the down payment. And it is going to be determined by your purchase price or the value, whichever is less. So the down payment varies by loan product, which we'll talk about, or the occupancy type, whether you're buying a primary residence, a second or vacation home, or perhaps you're looking to purchase an investment property. And I give an example here, just kind of a visual to show that if you're purchasing a home for $300,000 and the value of the appraisal comes in at $310,000, if your loan required a minimum of 5% down payment, we will loan on the 300, not the 310. But the good news is you're walking into your home when you close with equity already built in. One more click of the slide, please, Tony. Just want to touch on what is acceptable for down payment, and we'll talk about earnest money deposit in a second as well, but it all goes hand in hand. So when you're looking at acceptable sources of your down payment, obviously funds from checking, savings, and money market accounts are fine, but we want to look at the deposits into those bank accounts. If they're not payroll, we will likely be asking for a paper trail to source where those funds came from. Most often, investment and retirement accounts will allow you to borrow or withdraw funds for the purchase of a primary residence without penalty. So that's a common use for down payment. Also, gift funds, which are defined as money given from your spouse, a child, or another dependent, or by any person who is related by blood, marriage, adoption, legal guardianship, can provide a gift for you for down payment, as well as a fiance or a domestic partner. There are state and county down payment assistance programs that may be available. I would always advise to just check with that local municipality for availability and qualification if that was something that you were looking into. And then also a budget worksheet, making sure that your ability to save funds during the construction of your home can help with your mortgage approval. And sometimes will make the difference as to whether or not someone considers a brand new to-be-built home, giving that space and time to save the funds, or if they want to look at a completed inventory home or a resale purchase. So it does give you that time to save the funds for closing. And then last, obviously, proceeds from the sale of real estate are acceptable. Sometimes we will have customers that are selling personal items for down payment. It does get a little complex to document that. You would need bills of sales and detailed documentation, but it is possible. And I just wanted to mention on here the unacceptable sources of down payment, such as cash on hand. So if you like to keep cash in your safe or a safety deposit box, sometimes we refer to it as mattress money, that is going to be typically not able to be sourced, as well as any borrowed funds. So if you're borrowing funds, which we also consider that if you were utilizing a credit card or cash advance from a credit card, they're unsecured and borrowed and unacceptable to be used for down payment. So it is important to just make sure that aligned and understand before you make that purchase and give that earnest money to a seller, that you know what will be acceptable on the financing end. Next slide, Tony. So Carla mentioned earlier with the earnest money deposit, that is taken from Taylor Morrison as good faith at the time you purchase your home and go to contract. And you know, if you're purchasing an inventory home, you could, if that's completed, you could be closing in as soon as 30 to 60 days, or perhaps you're building a home, which could be closing anywhere from 6 up to 24 months, perhaps depending on the home and where you're purchasing. So that amount is going to vary by market and community, and that is a decision made by your seller, in this case, Taylor Morrison. We do want to make sure that you understand that anything you're giving as earnest money to the builder can be used for your down payment and towards your closing costs. So it is a credit provided to you the day of closing. And I gave an example. If you were a veteran or an active military service member and financing a VA loan, which will allow you to typically go to 100% financing, even though you're financing 100%, there is still an earnest money requirement by your seller. So again, credited towards your closing costs at closing, And many times on a VA loan, as example, you would actually receive money back at closing if you were financing 100%. So those funds are held in escrow until you close and used at the time of closing towards down payment and closing costs. But again, I would refer you to your local community sales manager and market to find out what those requirements are, because they do vary. Next slide, Tony. So interested party contributions, beyond your down payment, I mentioned closing costs. So you do have settlement costs that are associated whenever you purchase a home. And there's no real rule of thumb to calculate the cost because they vary depending on the market you purchase in. The cost will include lender fees and title or attorney fees to close the home. And there's government fees and transfer taxes depending on the state or municipality you're purchasing in. There's things such as your first year of homeowners insurance, and most customers will set up that escrow account to prepare for next year's real estate taxes and insurance. So all of that is collected at the time of closing, and many times there will be contributions towards those costs. It could be from your seller, your lender, and perhaps your real estate agent. And although they cannot ever contribute towards down payment, they may choose to assist with some of the costs that are associated with your financing. So for example, you may have a real estate agent that you're working with that brought you to Taylor Morrison. They could agree to contribute a portion of their commissions, or your lender, that would be us, hopefully, could provide you a credit at closing. All of our Taylor Morrison communities across the country do provide some sort of contribution towards your financing costs as an incentive when you do utilize Taylor Morrison Home Funding. And then we will double down with a lender credit when you apply for your loan, which will then go towards your closing costs at the time of closing. There are some maximum limitations on the percentage of your purchase price that can be given in a combination between your seller, your lender, and your real estate agent. But many times that combination does not exceed the max allowed by your loan product, and they can be paid towards those charges. So again, I just want to reiterate, it can't go towards down payment, but certainly those contributions can be used towards financing charges. Next slide, Tony. And then our third C, capacity, before I hand it over to Deandra to talk about credit, is just your employment and your income. And how are you going to repay the mortgage? We're looking at job stability and the likelihood of income continuing. So it is important to note that your mortgage approval is based on gross income, which is obviously before your federal and or state taxes are taken out. And we'll talk a little bit about monthly income and debt and how we understand the maximum spend against that income that we use for qualification. But first, job stability, knowing that we typically need a 2-year job history in the same line of work, but not necessarily the same employer is required. So if you've changed jobs in the last couple of years, that is perfectly fine, but typically the same line of work with no major decline in your income. And the exceptions to that, for example, if you're a recent college graduate and you're entering your career, you can provide college transcripts to show that you were finishing college, that you're working in the line of work for your degree, and we wouldn't necessarily need that 2-year history. But if you've had a gap in employment due to a hardship, or if you've taken time off for family reasons and you're re-entering the workforce, this also could be considered for qualification. When you're self-employed or you're a contract worker and receive 1099 income, the 2-year history, it's a little bit more strict, and that 2-year history is typically required. Also, when you want to add income from commission, bonus, overtime, and a second job, again, that 2-year history rule of thumb will usually apply. We have a lot of customers that rely on their Social Security and pension income. With our retired borrowers, that is also acceptable. If you're someone that receives distributions from an investment account, you can show enough funds in that account to continue an income stream for the next 3 years. That can be used as income. And then lastly, if you are someone that receives alimony or child support as income and you choose to utilize that to qualify, providing, for example, a divorce decree showing the continuance in the last 6 months of payments would be acceptable. We do always advise getting advice from a licensed loan consultant before you purchase to truly understand the income used for qualifying. We obviously offer our services if you're looking at Taylor Morrison, but hopefully if you're out there shopping for a home right now, you're having those conversations. With that being said, I'm going to pause on our first 3 C's. Stephanie, I'm going to turn it back over to you real quick and let Deandra follow you with some tips on credit qualification.
Thank you, Christy. If you advance to the next slide, Tony, we're receiving a few questions too, so this might help answer some questions around contingencies. You know, it does vary by market. We know that it's not a hard time to sell a home today, so it's not something that we are afraid of. But we know that a lot of buyers want optionality too when it comes to how they sell their home. We are proud to partner with OfferPad, who is, you know, a relatively competitive iBuyer in the space. In our 20 markets, I think 14 of them we overlap with OfferPad, where they are available to help provide you a cash offer for your home. So there are a lot of benefits of going through OfferPad. If you fall in love with the Taylor Morrison home, you can sell your current one to OfferPad. You can go online. It's a pretty seamless experience, and you can get a cash offer within 24 hours. Because of the partnership, you get a free local move. You get to pick your closing date so that you can stay in your current home in the same time until you are ready to move into your Taylor Morrison one. So this eliminates having to move more than one time. We do find this is a great benefit to our Taylor Morrison buyers if you're in the market for a different way to sell. So because through OfferPad, you can choose to have no showings, no repairs, nothing that you might have to do through a more typical selling process. So if OfferPad is not available in your market, we know that they are expanding. There are other services. We know that there's Opendoor, there's Redfin, there's all kinds of alternative ways to sell your home. If that is something that is part of your current situation, we do want to look at your whole situation and help provide opportunities and different ways to make it a lot easier for you in this process. So I will turn it over to Deandra, and she will take you home.
Thank you, Stephanie. I'm Deandra Avalos. I have been in the mortgage industry for about 21 years, and I was fortunate enough to find my home with Taylor Morrison about 14 years ago. It'll actually be 15 next month. To say that I was excited when presented the opportunity to be a part of our Aero department when it was first envisioned in 2011 is an understatement. I personally like to think that credit's like a thumbprint in its uniqueness, and that no two customers' credit profiles are the same. Each one tells a different story. So when working with customers on improving their credit to qualify or even strengthen the loan application, it allows me to see the most vulnerable side. It's not anything that we take lightly in our department, and each day that we're able to assist a customer, we consider it a privilege and an honor that they've placed their trust to help us guide them to their new front door. On to the next slide, please, Tony. So when we're looking at credit and quality, it's usually the topic that we almost get the most questions on. When looking at credit scores for a mortgage, they're going to be generated with all 3 major credit repositories: Equifax, TransUnion, and Experian. Many times it's thought that you need a 700 plus credit score to qualify, but it isn't necessarily true. There are some loan programs that allow a minimum credit score of 600, but obviously the lower the credit score, it's going to indicate that there have been some late payments, derogatory events, some little blemishes that may cause it to be a little bit more difficult in getting financed as well as getting the better rate. Let's go ahead and go to the next slide, Tony. These are the primary score factors that kind of contribute to the score. As you can see, 65% of the credit score is based solely on timely payments. And then the other main thing would be your credit usage or your utilization. It's going to be the amount of credit that you're using versus how much is available to you. Most creditors won't report a late payment to the bureaus unless the loan is 30 days past due or a credit card. So even if you have scores that are high enough for qualifying, you might disqualify yourself with a late payment. So it's never good to gamble that with a creditor. With the credit card balances, you want to make sure with your utilization, like if you have a limit of $1,000, that you're not using anything more than 30%, so maybe $300. You also want to be sure that that balance is what is due at the end of your billing cycle, as that is what gets reported to the credit bureaus each month. So as a quick example, when it comes to utilization, I did have a family member who had been working on enhancing their credit to get in a better place to purchase and get a better interest rate. They were looking at their overall total credit card balances to pay down rather than the individual cards themselves. So he paid off a lot of the smaller balances to get to zero and left some of the higher balance cards carrying over 80% of what he owed. He thought his total overall balances to overall credit limit would help get the score improvement that he was looking for. Plus, it probably felt better to reduce the amount of creditors that he owed money to. But although his scores did improve, he would have gotten more bang for the buck had he paid down all of the balances to 30% of the limit versus paying the balances on the smaller to zero. Let's talk about a few more tips on managing credit. Next slide, please, Tony. The credit basics when you're looking at a soft pull versus a hard pull. It's important to kind of understand the difference between the two, as there can be a lot of myths about credit inquiries. A hard inquiry is going to be something that happens when you're applying for a credit card, auto loan, mortgage loan. Those inquiries will remain on your credit for 2 years, and they could cause small incremental decreases in your overall score. But usually when you're shopping for big loans, such as a mortgage or an auto, you'll see incremental dings, but they're all counted as one inquiry within a 14 to 45-day time frame from that initial inquiry. When you pre-apply for a loan with Taylor Morrison Home Funding, we're going to do a soft pull, which only provides us with 2 of the 3 scores. A full credit report or a hard inquiry wouldn't be established until you make the decision to purchase a home and move forward with a formal loan application. Now, as far as the different types of credit, one of the most often questions that we receive would be, what would be the difference between the score that I see when I'm looking at my own scores, such as like with the credit card or credit monitoring company, versus what you're seeing when you pull the mortgage. Now, the mortgage score is going to be different because it's factored off of a different scoring model, and it's something that we like to educate our home buyers on when they're enrolled and going through the process. I'm sorry, I'm looking at a blank slide as far as the boxes. Next slide, please, Tony. There you go. Okay, so thank you. Credit qualification improvement and loan enhancement. So with Taylor Morrison Home Funding, our Aero department, which is Able, Ready, and Own, we're going to offer professional guidance on what it is that you can do to increase your credit score to a targeted goal, whether that goal is to meet qualification guidelines or whether you're trying to improve your score for a better interest rate. We'll go ahead and review your credit report and provide a personalized path specifically targeted for you with a timeline on how to improve your score. It's a complimentary service for those that are looking to purchase as well as those looking to go under contract. There is no obligation to purchase a home through Taylor Morrison Home Funding. Our Aero consultants will continue to work with you on a specific path for your needs. Some of the benefits with using Arrow, your credit score could increase for the qualification. You can improve your debt to income ratios, making you a stronger candidate for approval and better interest rates. We look at building trade lines, and it also helps if you're using financing and have mortgage insurance. The rate on that would be less as well, the higher that your score gets. And the next slide, please. So what we will do in our department is run credit simulations to see how the scores could improve, whether that would be opening up a new account, reducing credit card balances. We also assist with deletion of erroneous information reported, such as a late payment or a charge-off. We look at offering rapid rescores, which would improve the credit score by updating balances or trade line information within a 5 to 7 day window, as opposed to waiting the 30 to 45 days for everything to be updated gradually through the credit bureaus themselves. We also look at being removed as an authorized user simply because there may have been a missed payment on another account, which is having an adverse effect on your credit score. So it's something that we review as well. We can look at removing disputes that may have been placed. And we also assist with doing like a credit supplement to show that your debt to income ratios have been reduced. And I believe the next slide, we're going to go back to Christy so that she can go ahead and finish up with her portion of the finance. Thank you, guys.
Thanks, Deandra. And you guys, we know there's so much information on here. You know, Deandra's got a great slide on here just about some credit basics and how to, you know, the different aspects of credit and how you can improve. Again, not only the recording, but this presentation will be sent out as well. So just want to make sure that we leave plenty of time to answer some of the Q&A. But I just wanted to touch really quick on the different loan types because I have seen some questions pop in. You know, do we offer VA loans, and do we build in areas that offer USDA financing? So I just want to do a high-level overview now that we've covered some basic loan qualifications. First and foremost, conventional loans, which is going to be your most common loan type, which is your non-government loan, your classic down payment of 20%. However, we know you can do as little as 5% down with mortgage insurance attached, a premium attached to that monthly. But conventional loans actually offer specific loans for first-time home buyers, only requiring a 3% down payment. So that is an option as well. USDA, I did see a question there about whether we build in USDA rural areas. We do have small pockets. It's very tight as far as, you know, you've got to look it up on the map, but we do have pockets where USDA is offered. And it's great for customers who have little or no down payment and they don't fit the active military or retired veteran loan product with the VA. So again, that VA loan, yes, we absolutely offer it. And I will tell you that VA and FHA loans combined last year made up about nearly 20% of all of the loans that we did as a company. So we have lots of veterans and lots of FHA loan buyers. The FHA loan, which is secured by Federal Housing Administration, requires only 3.5% down payment. And it is a common myth that FHA is only for first-time homebuyers, and that's absolutely not the case. FHA's biggest requirement is that there's a maximum to what you can borrow based on the county loan limit. And they did just raise those in 2022. So it's a pretty rich breadth of opportunity for FHA homebuyers who maybe haven't saved up that 5 to 20% down payment. Next slide, please, Tony. Just want to, you know, if you were doing your own calculations and we're like, well, I don't really know how much I can afford. And I've talked about debt to income ratio and not to get into any major math problem, but I just want everyone to understand what a critical piece this is of the loan approval, because that calculation of debt ratio is comparing how much you owe monthly against how much you earn. So when we look at that pre-tax income that I mentioned earlier, we want to make certain that after you pay off your you pay your monthly new mortgage payment and the credit obligations that are reporting on credit, that obviously you want to have money left over to pay your other expenses. You got to pay the government their federal and state income taxes. You have to feed your family and clothe yourself, and you have childcare and utilities and all that fun stuff. So the solid rule of thumb is to not have that housing and credit expense be over 40% of your gross income, leaving plenty of money left over for other obligations. There are certainly your loan programs that allow higher than 50% of that gross income to be considered, and that really falls in that FHA and VA financing bucket. But you want to make sure you've got some good compensating factors, meaning your credit history is solid, you hold some cash reserves in the bank for a rainy day. And if you wanted to ever look at your own debt to income ratio calculation and you haven't spoken to a loan consultant yet, again, only consider that new housing payment and credit expenses. But I like to use the formula of take the little number divided by the big number. And that is how you get your debt income ratio. So obviously you want your expenses less than your income, and that gives you kind of that baseline for what you can start with. And next, Tony, lots of questions right now, you guys, that surround interest rates. We know that we are absolutely in a rising interest rate environment. If you're watching the news and you follow the market, there is no secret. But I thought that these were two really good visuals to understand that our rates right now are historically low. So when you look at this chart on the left and you see that 10-year trend, an entire decade of interest rates on average from 2009 to 2019, they're averaging on the low side at 3.6 to just over 5% over an entire decade. And we have literally been at rock bottom rates for the last 2 years. But honestly, what goes down has to come up. We have to be prepared for another potential economic crisis, and the economy is cyclical, and it is no secret what the last 2 years brought us globally, and driving interest rates down was absolutely imperative to keep our economy moving when there was such a scary time going on with our pandemic. And as we're moving out of that, we are going to see those things on inflation. We are going to see interest rates rise, but we are so blessed to be in a time where we also get to see our home values rising. And that gives that stability and peace of mind for all homeowners around the country, that they still have equity in their home. You know, I think it was Carla mentioned earlier, maybe it was Stephanie, excuse me, that our monthly, the rent rates have risen almost 18% this last year. So securing a home price and locking that in, and then being able to couple that and double down with a historically low fixed interest rate truly is a win-win. So I would agree, hands down, now is still a really good time to purchase. I've seen some questions in the Q&A about interest rates and locking in an interest rate. Buying new construction comes with a little gamble. You lock in your purchase price when you buy, but your interest rate is floating until typically you get closer to completion of your home. We do absolutely offer long-term interest rates up to 270 days. If we're locking over, I believe it's 105 days, there is an upfront cost to that because we're obviously hedging the market. But a lot of times, those incentive funds provided to you by Taylor Morrison and Taylor Morrison Home Funding, rather than considering those towards closing costs, you could almost think of that as, you know, could that be basically my insurance policy to protect myself against interest rates going over 5% as my home nears completion? So our loan consultants will work directly with you to help find, again, the right thing tailored to suit what you need, making sure that you understand, if I buy today and I qualify at today's interest rate, will I still qualify should rates go up? Again, knowing that your home values continue to rise, but we offer those long-term rate locks. Interest rates will vary on credit score, down payment, loan program, the state you're purchasing in, and the loan amount. So I will always refer anyone to speak directly with a loan consultant who's able to understand your scenario, your loan product, and give you the current interest rate based on that. So with that being said, we are going to wrap up our mortgage lesson, and I'm just going to, if you'll advance the slide, Tony, introduce you quickly to Dorothy, because I think we're on major information overload. But we do understand that purchasing a home is not something that happens often in your lifetime. It's a financial and an emotional commitment, and that largest purchase you'll probably ever make. So we want to make sure that we're able to guide you every step of the way. Dorothy came to life providing a state-of-the-art secure mortgage technology. I know the security of your documents, and with all of the cyber stealing that we have, we want to make sure that we offer a mortgage technology that can also work hand in hand with our Taylor Morrison Home Funding team. So you have that best financing experience with technology and a personal touch service together. We use industry standard encryption. You can trust Dorothy anytime. We have loan portals and upload capabilities, so you're never emailing documents back and forth in an email, and everything is protected in a portal. Kind of similar, we use the same type of technology that you would use if you did online banking, is probably the best analogy that I can give to that. So Tony, on the next slide, this just kind of gives a visual that if you're ready to pre-apply or pre-qualify, or you're considering Arrow as a service before you make that decision, you can get started by going to taylormorrison.com/home-financing. You can also get there directly from the Taylor Morrison website homepage. And you will get started with one of our professional loan consultants. So I saw a question in the Q&A about how do I get started with Arrow. Deandra has a phenomenal team. You'll start with a loan consultant who will do that initial look at your soft inquiry credit pool. And if you feel that you want to take it a step further at enhancing your qualification, we would do a tri-merge inquiry, and then we would refer you to an Arrow consultant after running a simulator to really enroll you and let them guide you through that piece. Again, you don't have to be a Taylor Morrison homeowner, and it is a complimentary service. So I highly encourage anyone who's starting to look to please reach out to us. You know, at the end of the day, we're just grateful for you guys to take the time on this. I'm going to punt this over to Carla in just a moment. I'm going to have Tony, if you wouldn't mind just advancing one more slide to just kind of walk our guests, walk our guests through the steps of home buying journey. And it really does start with pre-qualification. If you're looking to finance and you're not paying cash for your home, we really want you to start with a pre-qualification to make sure that you're in a good position to buy. If you are purchasing with cash and you're foregoing financing, you would provide your community sales manager with proof of those funds through bank statements or asset accounts in lieu of a mortgage pre-qualification. And it's at this time that you would provide the required earnest money to move forward when you sign your purchase agreement. Once you sign your purchase agreement, there is a financing contingency in your contract with Taylor Morrison. And if you choose to exercise that financing contingency, you would then complete a formal loan application with your loan consultant. And it's at this step when we gather the actual supporting documentation that we verbally talked about during your pre-qualification, such as pay stubs and bank statements. This would allow us to submit your loan into underwriting and really make sure that we didn't have any, we didn't forget to cross any T's or dot any I's, and we would get that formal underwriting approval. It's new construction. So if you are going to have a build time that extends beyond 120 days, you will likely be asked for updated information. So in the beginning, we want to make sure that Taylor Morrison and you have the comfort to move forward with construction of your home and taking the home off the market. And as we approach closing, we want to make sure that you still have those funds for closing. Nothing's changed in your financial situation that would disqualify you from purchasing. So Carla, I'm going to hand the mic back over to you to kind of take us through the remainder of that home buying journey. And just thank you guys very much for allowing us to be part of your afternoon with you.
Thank you, Christy. I wanted to really quick, there's quite a few questions in the Q&A that speak to interest lists and wait list and also the bidding process. So I just wanted to quickly mention that if you have already added your name to an interest list and you're waiting for the opportunity to purchase the home, I just wanted to reiterate to make sure, patience. Even if there's a list that's 100 people long, not all 100 people are going to move forward, whether, likelihood is those folks are also on other interest lists as well, and perhaps in different, at a different number. So they may move to another opportunity with another home, or just choose not to move forward. So suddenly your number can be, from number 50 to number 2 to number 1. So I ask that you continue to be patient, just continue to stay in communication with that community sales manager, because they're going to walk you through the next steps once that release happens. And of course, get pre-qualified and ensure that you know what your financing comfort zone is. So if you're in a situation, again, it depends by market. I'm kind of keeping it high level because every market's a little bit different. But if you're in a situation where you are participating in a highest and best offer situation, that you at least know what your comfort zone is with the bid. And then with us, we'll just review everything that comes in as fairly and equitable as possible. So, and again, it varies by market with step number 4 here with the design studio appointment. That is going to vary. Some markets are inventory only where everything has been pre-selected. And I mentioned canvas palettes as what we use to ensure that we have an on-trend and also materials that are readily available that can be installed during the timeline that we've set out and communicated to you. That's very important to remember, because as we customize, perhaps those materials become unavailable and reselections can happen. But design studio appointment, you would visit our designers and choose all your color selections. Once that is gathered, you would have the pre-construction meeting with our superintendent and community sales manager in order to review everything that you have selected from the home site, plans, options, your colors, and any low voltage or electrical items that you have added. From there, the superintendent then has a green light to go ahead and begin the construction of your home. As they go through construction, we'll meet up again, a pre-drywall meeting before we enclose the walls, if you will. We'll take a look at all the mechanicals, plumbing and electrical, walk you through those to ensure you understand the components behind the walls of your home. And then from there, the superintendent will continue with the rest of the process with the exterior and all the beautiful selections that are going into the home, which goes into that new home demonstration, where the superintendent will spend a couple of hours really showing you all the components and how everything works together, and also discussing what the warranty items and how to maintain your home as well. So it's a very important meeting. From there, we'll also just follow up with any touch-up items with the pre-closing meeting and then go to closing. But please remember, we don't leave you behind after that. Once you move into your home, we are going to follow up after 30 days to ensure everything is going well in your home and address any items that need to be addressed. We're going to send you a couple of surveys after that. Survey number 1 with a 10-month survey, and then following up with another survey that after your first year, you are still enjoying your Taylor Morrison home. So with that, I'm going to kick it back over to Stephanie since we're a couple minutes over.
Thank you, Carla. Tony, if you want to advance the slide, this is our last slide. This is just a huge heartfelt thank you to you from all of us at Taylor Morrison. We had several hundred of you join us today. We had several hundred questions come in through the Q&A. I know we did not get to all of them. We are feverishly trying to. If you had a very local market specific question, please feel free to send that into communications@taylormorrison.com and we will direct you to the right person who can answer that for you. If you are having issues getting signed up for an interest list, like Carla mentioned, we will direct you to the right place so that you do not miss any future communications on lot releases or coming soon communities. We know being in the know as early as you can on some of those coming soon communities and opportunities for lot releases are the best opportunity for you to get into a home. And that's our goal too. We are here to not make this process hard for you. We understand that the current environment is putting in some new processes and parameters that, are harder than in a typical normal kind of supply demand situation. So we're not a fan of it either. We're doing our best to be fair and to allow everyone an opportunity. But we're here for you and we want to be your partner in this process. It should be fun. This should be a pleasant experience, and we want to make sure that it is so. So we'd love to hear from you. Please send in those notes or questions and we will get back to you in a timely manner. Thank you to all of our speakers. Carla, you're a rock star. Christy, always a rock star, and Deandra is just such a fabulous group. And please stay on the lookout. We plan on having more webinars in the future. So if you got the invite to this one, you'll certainly get the invite to the next one. And all of our materials will be to you. Our commitment is by end of day or early tomorrow morning so that you can re-listen, share it with those that you love, those that are also in the process of buying a home. And we will be your partner in this process. So thank you again and enjoy the rest of your afternoon and your week. We will talk to you soon.